Tell me, is it exciting or is it unsettling? Or is it the way it's always been? Kind of like you're watching the world's energy chessboard get rearranged while a lot of players think they're still playing checkers. Now, the headlines scream about tariffs and sanctions, but beneath the noise, something far more fundamental is happening. And if we're not paying attention to the real fundamentals, we're going to miss the tremor before the earthquake. Have we lost our discernment, or can we tune in to what's really going on and see through the noise? I'm Mark Roach, and this is what we're tracking at FutureWise Energy. Let me cut through the market chatter with what actually matters. U.S. oil rigs have dropped to 414. That's down 14% year over year. Gas rigs sit at 118. That's off their recent high. WTI trades near $63. Henry Hub at 270. These aren't just data points, they're vital signs in an industry that seems like to me that it's in cautious retreat. But here's what the spreadsheets won't tell you. What we're witnessing is still the most significant realignment of global energy alliances in decades. And most of our industry is still fighting yesterday's war. While Washington waves tariffs, threats, and sanctions like diplomatic clubs, Beijing and Moscow are quietly building an infrastructure for post-American energy order. The Power of Siberia 2 pipeline isn't just moving 100 BCF or billion cubic meters of Russian gas to China annually. It's moving the center of gravity in global energy markets. China isn't just buying sanctioned Russian LNG through designated terminals. They're sending a message that would make any deal maker pause. They're saying, we don't need your permission anymore. And this isn't about defiance. It's about a strategic autonomy between these countries. And if you think rare earth leverage is China's only card to play, you haven't been watching this game long enough. So let's talk about the elephant in the room. That Trump-Putin summit everyone's been dissecting. And, here's the reality. It was a theater for the masses. The real economics driving American policy tell a different story entirely. Trump's economic agenda for America is fundamentally fueled by oil and gas exports to Europe, a relatively new and lucrative market for U.S. producers. Meanwhile, America's defense industry, it thrives on the Ukraine-Russian conflict, creating a profitable feedback loop that has little to do with diplomatic handshakes. Putin hasn't budged an inch throughout his entire ordeal, and he doesn't care about peace, not when energy leverage gives him more power than any negotiating table ever could. The man understands that controlling energy flow is more valuable than signing peace treaties that can be torn up tomorrow. So here's where it gets interesting. Our Permian productivity gains are impressive. The record 13.6 million barrels a day, U.S. crude oil production. The technology is world-class, efficiency gains are real, and we're expected to peak in 2026. Yet we're essentially running harder to stand still. Think about that paradox. We've never been more technically capable, yet our global market position is under assault from every direction. It's like having the best drill bits in the business when someone else controls the mineral rights. Now let me share something else from my experience that might explain the disconnect between rhetoric and reality. All this chest pounding about American oil and gas reserves, it's greatly exaggerated for posturing, at least technically speaking, because by industry standards, these reserves remain unproven. But here's the fascinating part. Most of the world operates on similar criteria, but this reserve inflation does seem to support an environment for developing additional oil and gas producing assets here in the U.S. And then there's also our expanding reach into Venezuela and other South American countries. So you can't rule out reserve development through strategic relationships either. The administration appears to be making bold foreign policy moves as if we'll maintain our energy independence advantage indefinitely. So watch for creative solutions designed to support growth and sustain production and export levels, because the gap between what we claim to have and what we can actually deliver at some point in time is going to require some very innovative bridge building. The Trump administration's approach: pressure Europe to cut Russian imports, threaten China with secondary tariffs. It sounds tough, but the results speak for themselves. Chinese imports of U.S. oil and LNG haven't grown at the pace we needed. Europe's still buying energy, just through longer supply chains. Meanwhile, that recent lifting of licensing restrictions for U.S. ethane exports to China, it's not confidence building, it's damage control. When you're making unilateral concessions, you're not negotiating from strength. Wall Street's calling for oil in the 50s next year, and rig counts reflect that cautious optimism. But what they're missing could be the structural shift happening beneath the price volatility. This isn't about temporary market corrections. This is about fundamental shifts in who controls energy flows, who sets prices, and who gets to decide which countries freeze in the dark when the lights go out. The EIA's surprise 7.7 million barrel inventory build, Saudi Arabia cutting prices for Asian deliveries, these aren't random market signals, they're symptoms of a system under stress. Here's what gives me measured optimism. American energy innovations have never been stronger. The new completion techniques and expanded infrastructure driving Permian productivity aren't accidents, the results of engineers and entrepreneurs who refuse to accept limitations. Now the 22% surge in U.S. gas exports through July proves global demand for American energy exists. The question isn't whether we can produce it. We can. The question is whether we can navigate the geopolitical obstacles to deliver it. In a world where energy is increasingly weaponized, transparency becomes our competitive edge. While other producers use energy exports to buy political influence or settle geopolitical scores, American energy companies operate in markets where contracts mean something and rule of law provides predictability. That's not idealism, that's a practical advantage, but only if we recognize it and leverage it and keep prices within a reasonable range. Adaptability isn't just a nice to have anymore. It is survival. The companies and countries that will thrive in this new landscape are those that can pivot faster than their competitors and think 3 moves ahead of their adversaries. We need infrastructures that can serve multiple markets, not just the ones that we're comfortable selling to today. We need technology that makes us indispensable, not just competitive. And we need policies that enhance our strategic position, not just our quarterly earnings. The tectonic plates beneath global energy are shifting, and we can either rise to meet these tremors or get buried by them. The Russia-China energy alliance isn't going away. The weaponization of energy exports isn't stopping. The race for technological supremacy isn't slowing down. But here's what I've learned from decades in this business. From the field to the boardroom, the companies that survive seismic shifts aren't the ones that predict them perfectly. They're the ones that adapt fast, are connected politically, especially when the ground starts moving. The headlines will keep screaming about today's crisis. The fundamentals will keep whispering about tomorrow's reality. The question is, which voices are you listening to? The ground beneath energy is shifting, and what defines us is whether we rise to meet the challenge or get left behind by those who do. I'm Mark Roach, and this is FutureWise Energy, wishing you all the best.